All right. Good morning, trade pros. Welcome to our morning market update for this beautiful Thursday, September 10th of 2020. This week's really passing by very quick. Let's have some fun. I think the market's going to see a little bit more movement today. Yesterday, our idea was to see a little bit of a sell-off and then start buying the upside. The narrative played out exactly like we expected. I didn't really catch a big piece of the move up. In fact, it finished down like 3 points or something like that. 3.5 points, if I do recall correctly. I just wasn't able to click in and take advantage of it. But we got a nice rally. The narrative played out well. And if you jumped on board, you made some money. Our team room did pretty good. And I'm proud of everyone, all the gals and guys at TRADEPRO Academy. Today's a new day, though. Let's start out with a fun fact, because I find this interesting with Tesla and everyone anticipating it being included in the S&P 500 index, and so buying the stock ahead of that event. It got snubbed. It never got included in the S&P 500 index. But let's look at the stats for companies that did get included in the S&P. So companies that were added to the S&P 500 since the pandemic hit the U.S. in March, because they adjust the S&P 500 index on a quarterly basis, all right, gained an average of about 6%, all right, in the 1 month period after they were included, and about 17.5% since then. So really, when you look at Tesla, even after the drop, it's up multiple times over the year. So the amount of benefit from the S&P 500 was overstated. And so I think the sell-off could be a little bit overstated. But I find that really interesting to see the inclusion of new stocks in S&P and how much they gain for future quarterly evaluations. So put this on your calendar for December when the S&P looks to include or exclude other companies. It's a pretty significant event. All right. The big news this morning is actually out of Europe. The ECB, the European Central Bank, headed by Christine Lagarde, former IMF head, and formerly was Mario Draghi, if you guys remember that. Bazooka Mario, he always had something exciting for traders. Christine Lagarde, not so much. She's not Bazooka Christine. She doesn't excite the market as much, doesn't drop any bombs and cause volatility, but pretty much they left the rates and the stimulus program unchanged. They've really redid some of their GDP forecasts for 2020. They went to -8% from -8.7. Slightly bullish. Still not good, though. It's still -8%. It's a pretty significant amount post-pandemic. So total 2020 GDP revised a little bit higher, but still in negative territory. 2021 expectation is for a 5% growth in GDP. No revision there. Same expectation as before. And 2022, they dropped it down to 3.2% from 3.3. These aren't massive changes by the ECB by any stretch of the imagination, but they did also say risks to growth outlook are still to the downside. All right, that's what Christine Lagarde said. Inflation forecast very slightly changed for just next year, 2021. Inflation is expected to edge up from 0.8 to 1%. 20 and 22 are unchanged. So here are some comments Christine Lagarde made, and I'll tell you what that means for the euro. So currency traders, it's kind of your day this morning. She said that risks to growth outlook are still a downside. Projections also include 2 alternative scenarios. She said that she's going to publish them after the press conference. Inflation will turn positive in 21, but remain subdued in the near term. FX appreciation will contribute. The euro's been really strong recently on the back of dollar weakness. All right, she said market expectations of inflation are at pre-pandemic levels, but remain subdued. Here's some notes. All right, last week, we saw a report saying that the strengthening of the euro dollar, was causing a lot of ECB officials to concern, all right, and that they would take action by needing to increase stimulus. So more stimulus for the market is actually good for stocks. More stimulus for the euro is not good, right? The euro currencies don't like intervention. And so this European dollar strength was said to, or was rumored to be causing great concerns at the ECB, the European Central Bank. Here's what Christine Lagarde said. She said that they're reportedly, she didn't say this, right? They're set to agree that there's no need to overreact to euro gains. I'll tell you this though, if they don't need to overreact, they're acknowledging that it's an issue. Okay, like you don't not overreact to things you don't care about. Like if you miss the bus, it's not like you're not overreacting. And so if you're not overreacting, you're actually acting to some sense, and you're concerned. And it's an admission of the fact that they're concerned about the strong euro. On the other token, though, not overreacting means that they're not going to take any kind of measures immediately. They're going to wait for the next ECB meeting. So that means the euro is free to continue to skyrocket or to bid to go a little bit higher. So we might see the euro pump up. Currency traders, this is your chance. Take advantage of this. How does this bode for the stock market in the U.S.? Has a minor influence, but it's pretty flat and neutral. I don't think this is going to stop the S&P from any upside or cause it to go down. But you should know what's going on in the market. Okay, in today's markets, Japan's up 1%, Hong Kong's down 0.6, China's down 0.6 as well. India's up 1.7. In Europe at midday, London's down 0.8%, Paris is down 0.2, Frankfurt up 0.2%. Excuse me. So European markets are really kind of consolidating, other than London, where Brexit's Bojo's having a rough go at the Brexit referendum. Not the referendum, but the execution of the Brexit. All right, in the U.S., Dow's down 1/10, S&P was down 1/10, NASDAQ was too. That was before we rallied through the prior day close. Some good news here in the morning. I'll tell you what they are. Okay, before we get into the economic events, let's talk about oil. Oil is down another 1.5% today. I was on the back of a report yesterday, an inventory report that's called the API report, and today we have another one at 10:30 called the DOE, which is very tradable, a lot of volatility, and our oil desk manager here, Steven's going to lead us through it. A ton of opportunity for the session in crude oil markets. But API yesterday increased by 3 million barrels a week. The expectation was minus 1.3. So this is an accumulation of inventory. More inventory means more supply, means lower prices. All right, we'll leave it there. Gold is pretty much flat. Bitcoin's up about a percentage point to over 10,000. All right, here were the drivers for this morning's move higher. Number one, initial jobless claims. A lot of traders don't realize this, but they changed the way they did initial claims numbers last week. Last Thursday was a new initial claims report, and the numbers and the way they're counted have deviated from the way they were. There's now seasonally adjusted numbers that are being printed. This means that the Bureau of Labor and Statistics, kind of like they do in their monthly private jobs reports, will have a look at the numbers and will attempt to adjust the number based on how many births and deaths they think have occurred. Okay, and you're pretty much fudging the number. Right? There's no need to seasonally adjust something. If it's a seasonal weakness, so what? You would know it's a seasonal weakness when you compare one month to the other over a 2-3 year span. Right? You don't need to seasonally adjust anything. So they're starting to fudge the numbers a little bit on initial jobless claims. I know how traders feel about that. They're going to start to become less important going forward. They've already lost their importance. I think initial jobless claims, I think with this fudging, they're going to even start to lose some more of their weight, which sucks because I love this trade every Thursday morning, especially in the pandemic. Okay, 8:30, jobless claims today came out. 884,000 people filed for unemployment. That is less than the expected 800, actually more than expected 846, but slightly more than the previous as well, just by 3,000 jobs. All right, what else do we have here? The continuing claims were at 13.38 million. The expectation was for 12.92, which means we have more people continuing to claim unemployment insurance than expected. Okay, and the prior number was 13.29, so it's higher than the prior as well. The way this is bullish is the initial claims are under 1 million for another week, all right, and they're very close to what last week's was. And this is kind of a good sign, I suppose, for the markets. Another good sign is the producer price index. Inflation dropped a little bit. The PPI came out at 0.3% on a month-to-month basis. Minus food and energy was 0.4%. So inflation is down from the prior numbers of 0.6 and 0.5. The good news is if inflation is down, the Federal Reserve could continue to provide stimulus to these markets. And so that's bullish for stocks. And so it's not the reaction to inflation, it's the reaction to the potential action due to inflation. Not what will happen, but what won't happen. And what won't happen is the Federal Reserve won't start to cut back their stimulus program. They're getting inflation. They've already said they'll temporarily let it overrun if they need to, but they don't need to at the moment. So this is good. So this means longer periods of more stimulus. So party on for the market. You can see right around the 8:30, the rally took off from the prior day close to where we're at the moment, about 20 points or so. All right, got a great trading day ahead of us. We got oil inventory at 10:30. We got some T-bill note auctions later on in the afternoon, then the money supply and Fed balance sheet after the closing bell. But it's going to be exciting. I think we'll get some more opportunities today. I do think we continue to the upside. I think the sell-off is going to get retraced a little bit further or a little bit higher from here, and we're going to watch out for that. So I expect off the opening bell, slight weakness, very early morning, and I expect the bid to pick up and continue higher. If it doesn't, we'll go to the short side. You don't have to be right. You just have to make money. Love you guys on YouTube. Yeah, it is a TPA hoodie, Michael T. TRADEPRO Academy. The only good sign is the data is too bad, so I might pressure Congress to do something. Smoky world here. Fires everywhere up the West Coast from California and Washington State. Yeah, Barbara, I heard about that. I saw some pictures. It's like an orange glow. It's pretty wild. Be safe out there. All right, YouTube. Love you guys. We got to get into the trading room. Appreciate you. And we're going to set up some levels for oil and S&P and trade it for the day with our team. Hope to see you in there. Take care. Goodbye.